SEMR, Semrush Holdings. This is a SaaS company that's offering a very interesting setup. Now, I am full transparency. I'm long around this 720-ish area right now with a very, very, very tight stop down here at 705. Very tight stop. And why is that? Well, before we go anywhere, let's just zoom all the way out. The all-time low for this company is $7.08. We're trading at 723. Look at all these wicks. Wick. This is the monthly candles, right? Wick. Every time it gets down here, with the exception of this current candle so far, and the month isn't over, it has left a wick. Every single time it is not broken lower. These lows are 719, 716, 721, 725, 736. Every single time it has been bit up. Technically speaking, I said this within a prior video about Tenable, this is a knife catch. This is not clean technically at all. This looks like trash. It looks bearish here on the daily. They reported earnings. Bad reaction off of earnings broke this downtrend to the downside. Weekly, big old red candle broke the downtrend to the downside on higher volume. Pretty bearish. Monthly, bearish MACD falling on higher volume. It has actually been hated on for about 6 months. This 6 months ago was at $18. This was over 100% premium of its current price just 7 months ago. And that's a little bit of the risk you take when you're investing in it's not necessarily a small cap, it's a $1 billion company down here at this evaluation, so up here at $2 billion. But again, what I like about this and what could be an interesting opportunity here is because you're risking all-time lows here. And these are the kind of opportunities I want to highlight because these aren't necessarily bad companies, but they're companies that are vulnerable. And you want to be looking out for companies that are really vulnerable because they can offer you very tight risk to reward. And in this scenario, again, with my entry being around 7.20 cents, something like that, I'm risking a 23-cent drawdown, and I put my stop under the all-time low. So you want to be careful. You want to put it necessarily at the all-time low or just like a penny or two. You want to go a few cents under. So me personally, I went at 705, and maybe now I'm thinking about it in real time, maybe I move it down to like 695 because maybe $7 as a whole number gets swept. Maybe 699 gets swept, right? So I don't necessarily want to get stopped out on that and then it goes whoop to the upside. But even if, right, I'm risking 23 cents drawdown here just to revert to my first price target of 781. Just the first price target before we hit any of these other ones I've got mapped out here. The very first price target, which mind you, price was at 3 days ago, would give me a 2.3 to 1 risk to return or risk to reward scenario. And again, if we manage to get all the way up here, roughly, where we were just 7 short months ago, I'm over 100% on equity on this name. This is a name where, again, it's not without its risk, but the risk is very small comparatively to other names where you're buying into high momentum trades or something like that. This is a name that has gotten beaten down, that had a pretty decent technical break. It is bearish on the daily. It is bearish on the weekly. It is bearish on the monthly. It looks like a bear is going to try to push its head underwater here and break those all-time lows, and it may. It could happen, right? But risking 3% drawdown, 2% drawdown, a few cents here is well worth the risk if the bulls can step in, if the bulls defend that all-time low. You have a very attractive reversal trade here, and some of these names of equity that I like highlighting are these names that you could hold on and not worry about, right? This reverses out, it gets up to $11. The fluctuations aren't going to matter to you. You're going to be losing pennies or whatever every other day, but you can patiently wait and see it slowly reverse to the upside here if you're a long-term investor. Now, this is a SaaS company. Not everyone loves them, so make sure you do a little bit of your due diligence before diving into this name. But even from a technical basis, it's garbage, right? It's not good from a technical basis, but from a dollar and cents basis, this is a good risk to return opportunity here on Semrush, simply due to the fact that if you establish a very, very, very tight stop, you're risking all-time lows. The price would never have been lower in the 4 years that this was on the stock market. So that's why I like Semrush from a risk to return ratio perspective. So not necessarily from a technical basis by any means, which is how I typically trade. But when you're talking about dollars and cents, it makes a lot of sense to take a stab here, because I'm sure there's lots of other risk you guys have taken in the market. I know I have, where the risk is much higher and you don't have as much potential at a decent reward. And I think the potential in SEMrush here is very high if you're patient and if you have the appropriate stop on SEMrush.